Ladies and gentlemen, good evening. My name is Paul Kaufman, and as the Dean of the Faculty of Business and Economics, I am truly delighted to welcome you to the 2017 CPA Australia, University of Melbourne Annual Research Lecture. In our customary way, I would like to acknowledge the Wurundjeri people of the Kulin Nation, traditional owners of the land on which tonight's event takes place. We respectfully recognise their elders, past and present. I would like to extend a very cordial welcome to Terry Brooks, FCPA, the President of the Victorian Division of CPA Australia, and his fellow council members. I wish to also welcome our presenter for tonight's lecture, the 78th in the series, Mr. Andrew Greaves, Auditor-General for Victoria, whom I will shortly ask Acting Head of the Department of Accounting, Professor Michael Devon, to introduce. I'm pleased that we are joined by colleagues from far afield and across industry and academia. I would like to welcome delegates from the CPA Congress, staff and students of the university, members of CPA Australia and of the profession and the general public. Of all the lecture series at the University of Melbourne, this one is the longest running. It was first presented by Sir Alex Fitzgerald in 1940. Sir Alex was a leader in education, a pioneer in accounting research, and was the second to serve in the role of head of department at the University of Melbourne. His brother Garrett was also a key figure in accounting, and a professorial chair in the department now bears their name. We are very pleased to have with us in our audience descendants of the Fitzgerald brothers. We most warmly welcome them here tonight and value this ongoing link with the lecture's origins. It is indeed a very proud tradition that continues tonight. Our presenter, Mr. Andrew Greaves, continues the long line of prominent speakers who have gone before him to tackle challenging questions, present new ideas, and find better ways of understanding the field of accounting. Ladies and gentlemen, thank you for your attendance here tonight. I hope that your experience this evening is going to be an enlightening one. Before I conclude, I would like to note that this public lecture is being filmed for university purposes, and that any questions you may ask at the conclusion of the lecture in the Q&A will be recorded. I would now like to call on Professor Michael Devon to come forward to introduce tonight's presenter.
Thanks, Paul. It's my pleasure to introduce our speaker tonight, Mr. Andrew Greaves, the Auditor-General of Victoria. Someone who I think if you get to know him, you'll realise really doesn't need much in the way of an introduction, but has a lot of experience to share with us. 30 years of experience in public sector, external and internal audit at the federal, state and local government levels. Commenced as our Auditor-General in Victoria in September 2016, after a 5-year stint as the Auditor-General in Queensland. Prior to that, from 2003 to 2011, Andrew held various roles at the Victorian Auditor-General's Office, including Assistant Auditor-General Performance Audit and Assistant Auditor-General Financial Audit. So a lot of experience is going to come into the discussion of performance. Andrew is an Executive Fellow of the Australia and New Zealand School of Government, a Fellow of CPA Australia and Chartered Accountants Australia and New Zealand. He holds a Bachelor of Economics from the Australian National University. I'd like to ask you to join me in welcoming Andrew to the podium for the presentation of his lecture, Measuring and Reporting Performance.
Thanks very much for that warm welcome and introduction. So I'm labouring with a cold tonight, but I'm going to continue and persist, and I won't try to do what the UK Prime Minister did and cough and splutter halfway through, but we'll see how we go. I feel the weight of history upon my shoulders, the longest continuous lecture series, and I was talking to Jeff Burrows about this and referring to the book that he produced in 2008. And what I observed is not just the weight of history from it being this longest continuous series of lectures, but from my reading of his book and my subsequent research, I think I'm only the third public servant to be giving this lecture while serving as a public servant. And the other two public servants who have given this lecture, Don Steele-Craik in 1980 was the Commonwealth Auditor-General, and Dick Humphrey in 1986 was the Victorian Auditor-General at the time. So it's been a fair while between drinks, but I'm glad to be here representing the public sector. And so tonight I'll be talking mainly about the public sector, obviously given my experience. You wouldn't be surprised to hear that. In preparing for tonight, I need to recognise and thank some of my own staff who are here, particularly Jessica Cross and Susan Fraser, who have done a lot of background work for me on this lecture. And there is a paper that goes with this tonight. So I don't intend to read from the paper. I think that would be, you can read the paper. Not everything I talk about tonight's in the paper, and not everything that's on the slides are in the paper. So I also don't want to give you death by PowerPoint. So I'm going to actually divert from the paper and speak mainly, hopefully, about some practical examples. Now, I also had some writing instructions before I came down here, and I'm allowed to be controversial, apparently, because we like to stimulate debate and discussion. So I'll try to be controversial. We'll see how we go. And I think I've got about 40 minutes, and then we're going to have a question and answer session. So I'm looking forward to that. But what I might try and do is truncate my presentation so we can have much more interaction. We'll see how controversial I've been, and we'll see what type of questions I get at the end of it. When Dick Humphrey gave his talk in 1986, he spoke about then the need for better reporting in the public sector. But he spoke about that in the context of, at the time, the public sector in its financial reporting was pretty much cash-based. So he came and he advocated the need for full accrual financial statements by all public sector entities. So 31 years later, here I am, and I'm advocating for better reporting by the public sector. But I'm not advocating in terms of the financial statements, which are now well entrenched in all public sector jurisdictions here in Australia and most Western democracies overseas. I'm advocating for the reporting of service performance, or what we call non-financial performance. And that's, once again, what I'll be focusing on tonight. So I have a series of propositions that I hope to be able to convince you have some validity as I go through this tonight. The focus is on, as I said, the public sector. And the public sector is no small part of our economy. In most states and in the Australian context, the public sector makes up around about 1/5 of our gross domestic or gross state product. So these are no small amounts to be concerned with. I think the Bureau of Statistics, the last time I looked, said that the public sector employed well over 1 million employees across Australia. So a significant component of our workforce. And of course that doesn't account for those in the not-for-profit NGO sector who are providing services for and on behalf of government, and of course more recently the private sector providing services for and on behalf of government. So I think it is worthwhile, and again if I reflect on Jeff's book, at the time in 2008 there'd been 7 lectures, I think the number was, about the public sector, so here's the 8th. So we've got about 10% of the lectures are dealing with this. So here are my propositions, which you've now hopefully had time to read, so I don't want to labour them too much. But public benefit entities, which I'm using to describe the public sector entities that are not for-profit. So all public sectors have some for-profit entities, but most of the public sector is made up of not-for-profit entities. We typically refer to it as the general government sector, and it makes up a huge proportion of the total state sector. In Victoria, it's 80 or 90% of total expenditure is actually incurred by the not-for-profit public sector, and the rest is incurred by the for-profit entities that sit outside the general government sector. But all public sector entities produce general purpose financial reports. It's a requirement, and it's a universal requirement, not just here in Victoria, but around Australia. and all public sector entities produce general purpose financial reports in accordance with Australian accounting standards. In the private sector, when we look at the general purpose financial reports of the private sector, we refer to them as performance reports. We extract from them information about the performance of private sector entities. We look at their bottom line, their profitability, and we derive measures and ratios predicated on that, related to their balance sheet, to understand their performance. So while general purpose financial reporting is quite prevalent in the public sector, my argument is they tell you very little about performance of public sector entities. The analogy cannot be drawn between the private sector financial statement, where we argue that it does actually tell you both how much and how well. So how big is the profit? What is the return on assets? What is the earnings per share? In the public sector context, the critique is that the general purpose financial reports that we all consume tell us how much, but tell us nothing about how well. So that's kind of the proposition for why we would need to have some other form of reporting by the public sector. We can't rely on the general purpose financial reports, the financial statements, because they tell us an incomplete story. Now, there's debate, of course, in the private sector along these lines, questioning whether or not the financial statements in and of themselves are sufficient. And we're moving into sustainability reporting and corporate social reporting and broadening the conception in the private sector of what's reported to fully understand performance. But I think that's a different issue, and it's not the issue I'm going to talk about tonight. So what should be and is prevalent in the public sector is this concept of service performance reporting. And most public sector jurisdictions actually report service performance information. But the contention is, and I'll take you through it tonight, that it is very underdeveloped and very underutilised as an accountability mechanism to understand and hold to account public sector entities and governments, their performance. In fact, I go so far as to argue that we are privileging the financial information over the non-financial information, and that is to our detriment. And I want to explore why I think we are privileging the financial information over the non-financial information. And lastly, at the end of the talk, I'll be advocating for the equivalent of a conceptual framework for performance reporting and a set of standards for performance reporting that have the same basis and standing as the accounting standards have for general purpose financial reporting. So there's a lot of propositions there. I guess it's up to me now to argue the merits of each of those propositions. So I'm not going to go straight to service performance reporting, which is the major focus. I don't want to pass too lightly over the general purpose financial reports. I just want to explore in passing some of the limitations with general purpose financial reports in the public sector as measures of the performance of the public sector. And I've got a series of practical examples I want to talk to you which exemplify the problems we have with using traditional performance measures, operating result or profit, net assets, and applying those in the public sector context. What I find, so I'm speaking as a practitioner, is there's a lot of confusion by the users of public sector financial reports. And part of that confusion is because they look and feel like a private sector financial report. They are structured the same way. They have an operating result at the bottom. And the natural inclination of the user of that report is to interpret the result at the bottom of the financial statement as a profit. But it's axiomatic that it's not profit. We are talking here about not-for-profit entities. So that bottom line in the statements of comprehensive income of public sector entities that are not-for-profit cannot be profit. So what is it? You know, we look at the headline revenue in both the not-for-profit and the for-profit, there are two separate standards. So we don't have anymore this concept of sector neutrality in general purpose financial reporting. It was a concept when Australia moved to adopt IFRS and determined that we would apply a single set of accounting standards to both the public sector and the private sector, or the for-profit and the not-for-profits. We had a conception initially of sector neutrality. We now talk about transaction neutrality rather than sector neutrality. So sector neutrality doesn't exist because we have specific standards that deal just with not-for-profit entities, and we have specific standards that deal with for-profits, and then within standards we have inclusions and exclusions, carve-outs and carve-ins that address for-profit and not-for-profit issues separately. So the headline items in a not-for-profit set of accounts are subject to one standard, which is pretty much, the headline revenue there is grants and appropriations. The headline revenue in a for-profit entity is its sales revenue, and it's subject to the accounting standard, the new accounting standard that's coming out on accounting for contracts. So how does this play out in these practical examples? So conceptually they're different. There are different standards. There are different ways we measure operating results in the public sector. So how does it play out in practice? Here's a few examples. The first example is, I talk about, we use this term not-for-profit. In fact, many public sector entities are what I call for-loss entities. They are absolutely designed to make losses. That is the intent. And we've got some lovely sporting infrastructure here in Victoria. You know, the MCG, Cardinia Park Trust down in Geelong, the State Sports Centre Trust, which looks after the Netball Centre, Melbourne Olympic Parks Trusts. Go and grab the financial statements of the State Sports Centre Trust. They make a loss every year of $10 million. They have an accumulated loss of $100 million in their balance sheet. So private sector notions of going concern don't apply here. Why do they have that? Because the government policy of the day is that they will only recover enough cash to run their operations without regard to replacing their assets. So most of their losses are in fact related to the depreciation that gets recorded in their income statement based on the assets they have in their balance sheet, but they're never going to generate enough revenue, given the policy settings, to ever be able to replace their assets. They always have to rely on the government of the day building the asset and giving the asset to them. So clearly, here's an example. If I were trying to say, how well is the State Sports Centre Trust performing? The last thing I would do is look at their income statement and say, well, they're pretty bad managers because they're making losses. And yet that is quite often how that result is interpreted, when people don't understand the context within which it happens. We have some rural water bodies in Victoria, and these are price-regulated bodies. So they can only charge what the Essential Service Commission tells them they can charge for water. Now, the way the ESC determines how much we can be charged for our water is they go to what they call their regulated asset base, or the regulatory asset base. In these rural water bodies, they've determined that the regulated asset base is equivalent to no more than 2% of the total assets they own. So 98% of the assets on their balance sheet, they're never going to be recovering through their revenues, through the fees they charge you. So again, it's another example that they will continually make losses. But that's the intent. That's the government policy. Health services, hospitals. Another example. This is even a bit more confusing because hospitals are funded these days through what we call activity-based funding. And the activity-based funding is based on a national efficient price. There's a national model, and it basically standardises units of activity, and hospitals are told and bid for how much activity they're going to undertake each year, and then they get given that funding through the Department of Health. And that's pretty much how it operates across Australia, in pretty much all hospitals. The problem we have with this model, well, it's not a problem, but recognising within this model that funding, again, like the State Sports Centres Trusts, does not include depreciation funding. So the starting point for a health service is that they will make a loss at least equivalent to their depreciation funding. Now they don't because they generate some other revenue, but it doesn't remove the point. And who controls the assets? Well, they're actually reported in the health service's financial statements as though the board of the health service controls and owns those assets. But they have absolutely no say in whether or not a new hospital is going to be built. The government determines where the new hospitals are going to be built, and the government determines how much money it's going to give to each health service each year for its capital needs. So now we've got a governance model which on the surface, because it's a set of general purpose financial reports, looks as though the health service is totally responsible for and accountable for its results, and yet half of the information in its income statement, depreciation and any capital grants, are totally outside its control. And the balance sheet is pretty much outside its control. So these are hybrid governance models which don't fit very well into this financial reporting entity concept and this idea of measurement of income and expenditure. Another example, so I'm not going to labour them because I want to get on to the juicy bit. Departmental financial statements. These are units of administration. These actually aren't separate legal entities, but each government department reports on its results. To what end and to what effect? If people want to hold governments to account, normally they look at the total state sector and the general government sector level. They don't look at the individual entity level. If we're going to hold our government to account, we're interested in what's the level of debt for the state. We're not interested in whether or not the Department of A or the Department of B made a result that was positive or negative in any one year. So there's some argument that even reporting at the departmental level doesn't have much meaning in terms of assessing and understanding its performance. In fact, I know, because I've got a Canadian now working for me, that in Canada, departments don't produce financial statements because there's units of administration, they're not reporting entities. And the last one, there's one of our insurers in Victoria basically had no equity in its balance sheet. And it had negative equity to the extent that it had accumulated losses. And that's been a feature for the last couple of years. But the reason it had no equity, no contributed capital from government, is because government had taken all the capital out of it. As the owner, they had extracted the capital. And then last year, they wanted to extract more capital. So the proposal, and this is really difficult in the accounting standards, the proposal was to convert the accumulated losses into bigger accumulated losses so they could extract capital. So it becomes a little bit meaningless when you're trying to assess the performance of that entity in the context of government decisions about where they're going to allocate capital. So it's quite within the government's power, and as it should be, to determine if they're going to have their equity out in the public non-financial corporations or they're going to keep their equity in the general government sector. These are policy decisions, but they have real impacts on their general purpose financial reports, to the point that, which is my first contention, general purpose financial reports in the public sector for not-for-profit entities really don't speak very much to their performance. I'll skip over land, under, roads and local government because this could take hours. But I'm happy to come back to land, under, roads and grants to local government in the Q&A. So, where do we go to if the GPFR are imperfect at best measures of performance of public sector entities? The convergence of thinking is that we should be measuring service performance in other ways. And here's an extract from the report on government services that the Productivity Commission does each year, and it gives some rationale as to why you might want to report service performance information. Underpinning it is essentially this concept. Governments coercively extract money from us through taxation, levies and fees. We have no ability not to pay them. And therefore, they're charged with making sure they spend that money as efficiently and effectively as possible, you know, given this relationship we have with them. Yet the general purpose financial reports don't speak to efficiency or effectiveness. And quite often the public sector are monopoly providers. So there's the propensity for rent-seeking behaviour as a monopoly provider. So we needed to be guarded against that. So the general theory, and this has been developed over the last 20 or so years, is that we really need to start measuring other attributes and things that speak to efficiency and effectiveness. What have they done with the money we gave to them? Have they achieved their policy or program or service objectives, which would be the first thing you'd want to know. But more importantly, maybe not more importantly, maybe as importantly, not just have they achieved their objectives, but have they done that efficiently? So they're the two parts of the question that need to be answered. You know, it's not achieve at any cost, it must be to achieve at a reasonable cost. Because there's no market discipline, because we have no price signals, it's in fact more important in the not-for-profit public sector that we can start measuring their efficiency as much as measuring their effectiveness. So these definitions, these concepts of efficiency and effectiveness are now well articulated, well understood, and are features of most public sector frameworks that speak to reporting on service performance information. Just to make it real for you, here's a service logic model which once again comes from the report on government services. And what I'm talking about here, technical efficiency is really, as it said in the definition, the conversion of inputs into outputs. And effectiveness is the achievement of outcomes against your objectives. To make that real for you, here's an example from a guideline that was published by the International Public Sector Accounting Standards Board on reporting service performance information. It's about vaccination programs. Quite topical at the moment. We just had a report last week that Victoria's just about hit herd immunity and had about 95% vaccination rates in young children. So one of the output objectives, one of the output measures was to get herd immunity, was to have 95%. So if we're looking at the output effectiveness, it would be how many or what proportion of the population is vaccinated. The outcome, of course, is the eradication or elimination of that disease in society generally, or in the population that it's targeted at. Technical efficiency, one example of technical efficiency is how much does it cost me to vaccinate an infant? And the cost effectiveness measure is how much do I have to spend to reduce the incidence of disease by a certain amount? And of course the program effectiveness is have I eradicated that disease, or to what extent is it still prevalent in the population? So that's just to give you some practical to add to the definitional. So the argument is this has now been discussed and defined and kind of promulgated through guidelines in public sectors in Australia and overseas for at least the last decade, if not longer. And yet, so the second point, my argument in my lecture, is that it's very underdeveloped and underutilised. So in preparing for the lecture, what we did is go back and look from 2000 at all jurisdictions in Australia and the Auditors-General's critiques of service performance reporting. And I'll take you through some of those, but you can see the summary there. But don't just take our word for it as Auditors-General. The Commonwealth Government has just moved to a new service performance reporting framework. And in them looking at their own service performance information, they found some things very similar to the things Auditors-General have found over these last 10, 15 years. What they reported when they examined the Commonwealth over the last 10 or 15 years was that there weren't measures that spoke to efficiency or effectiveness, that the measures changed year on year. So some of these attributes that we love about financial reporting, comparability, consistency, don't exist in the framework of service performance reporting. At least that was the judgment of the Department of Treasury and Finance, or Department of Finance at the Commonwealth level, a couple of years ago when they introduced their new legislation, their new framework. So did we find the same thing as Auditors-General? Absolutely we did. Here's some earlier reviews and critiques by the Commonwealth Auditor-General of service performance. And the thing is that these critiques persist over time, from 2000 to 2017, and across jurisdictions. It's not as though any one is doing better than any other. And so we have to ask ourselves, why does this keep happening? If we accept that GPFR are very imperfect measures of performance, if we accept academia and practitioners saying that really the main game is here in service performance reporting, why do we continue to see service reporting done so poorly in the public sector? So this is what the Commonwealth Auditor-General said. This is what the Victorian Auditors-General have said over time. And you can see there's a recurring theme here. In fact, most recently we did a report. That last one actually speaks to an entity we looked at, the Public Service Commission. But it typified to me and just reinforced all the problems we'd found over the decades here in Victoria. And of course, given that I came from Queensland, one of the first things I did when I got to Queensland was say, well, how well are they doing it up here? Surely some states doing it well. And I was heartened when I first got to Queensland because the framework that was espoused there said, right, we're not going to get into inputs and activities, which have been critiques and criticisms of other frameworks. In other words, what public sectors were doing, they were measuring activity. They were measuring how much they did of something. How many papers did we produce last year? How many conferences did we attend? Right? Which spoke nothing to outcome. And so that was a legitimate critique, and the Commonwealth picked that up. In Queensland, I got there and they said, right, let's throw all that out. We're now only going to have efficiency and effectiveness measures, and we're going to focus on outcomes. So we started looking at all the efficiency and effectiveness measures in Queensland, and the majority of them weren't efficiency and effectiveness measures, and they weren't output and outcome measures. They were still input and activity measures. And we think to ourselves, well, why does that happen? Now, when I looked at all these reports over the last 15 years, not every Auditor-General got to the root cause, but I can tell you what we found in Queensland, why this was the case. And there are three keys here. First, lack of political will, because it's the way you hold the executive government to account. So, is there any political will to actually be reporting performance measures that might say you're inefficient or you're ineffective? The second element, within entities, the leadership of the entity wasn't paying any attention to whether they were efficient or effective. Now, maybe they got their steer from the political masters, but when we actually asked the leadership of entities, the boards, the chief executives, the directors general, what performance information do you routinely look at month by month, year by year? It wasn't about efficiency and effectiveness. And then the third element we found in Queensland was that the people who were compiling this stuff really didn't understand the concepts. They hadn't been trained, they hadn't been resourced. A lot of the people putting it in the annual report were the people who prepared the annual report. And people who prepare annual reports quite often are there to make it sound and look good. That's their job. They're not really there to critically analyse the performance of the organisation and write something transparent and accountable for it. So they were the three things we found in Queensland, and I'd suggest they're the types of things you would find in every jurisdiction. I am heartened, though, that there is progress and there are some jurisdictions that are actually doing it reasonably well. So I didn't mention Western Australia. Western Australia's actually had outcomes reporting in now for a couple of decades. And are doing making a fair fist of it, would be the assessment. So they stand out there. What do I think the answer is? As I said, one of my propositions, how do I overcome this lack of political will, the lack of executive interest, the lack of training and support? Well, I look to the accounting standards and I say, we've got this fantastic conceptual framework for the accounting, for financial reporting, backed by a whole series of accounting standards. We put a huge amount of resource into the conceptual framework in the accounting standards. Universities spend a lot of time training their staff in the interpretation and application of accounting standards. Finance functions employ people who understand accounting standards. The accounting standards setters have an ongoing program and put a huge amount of resource into that. Where's the resource applied to service performance reporting? Where's the conceptual framework for service performance reporting? Who's putting the resource and effort into it? Well, the standard setters for service reporting are effectively the Departments of Treasury and Finance in each state. A little bit of self-interest there. There is no independent standard setter. There is no independent framework which applies universally to all public services across Australia. So I think that's what's missing in this piece. Now, we've made some moves in Australia. There was an exposure draft issued last year, ED 270, by the accounting standard setters, funnily enough, saying, whoa, we better put something out about service performance reporting. Now, I've been given some inside oil that maybe the communication wasn't too good there, and it got a bit of a lukewarm reception, if not a hostile reception, from the not-for-profits outside the public sector. But it's still a work in progress. So there's one answer, that we create this framework and we establish a conceptual framework and some standards which speak to performance reporting. Here's two different ways of thinking about it. The ED 270 model, which is also mirrored by the International Public Sector Accounting Standards Board in their guide on reporting service performance information, would say integrate the reporting of service performance with reporting of financial performance. In fact, integrate some of those service performance information on efficiency and effectiveness into the financial report itself. And that way people can actually see the financial result and they can see whether the service was efficient or effective. The alternative is what the Commonwealth government's arrived at the moment, which is to produce a separate performance statement which goes alongside the financial statement. Now, having looked at the Commonwealth, I don't know if anyone here is from the Commonwealth, I don't think it goes anywhere near far enough. I don't think there's not a lot of rigour around the conceptual framework in the Commonwealth guidance. There's an exhortation to public servants in the guidelines that the Commonwealth put out to tell a rich story. Now, you know, I get that. I think I understand what tell a rich story means, but I don't get the guidance below that helps me weed out what's important and what's not important, defines for me what's material and what's not material. So I think there's still some work to be done on the conceptual framework as such as it is at the Commonwealth level and at each state level. But the thing that's missing from the Commonwealth and from most states is that the statements that are produced, service performance statements, are not audited. So New Zealand, I will now point to, as I believe, the best practice here. Not only have they integrated their performance reporting with their financial reporting, they're having their performance statements audited independently. So I guess that's where I'm going to leave it. That's what I think much of the solution to the problems that we've diagnosed over the last 15 years lies. I think it's about a conceptual framework, standards, and an assurance framework to go with it. So I hope, and here's the slide which talks about some of the principles which I also stole from the report on government services. So I hope in summation that I've been able to prove to you those propositions, that general purpose financial reporting in the public sector is privileged. If I measure how much information is in an annual report that's actually the financial statements, typically it's at least 50% of the real estate of an annual report is the general purpose financial report. And of the other 50%, there's a lot of spin. So actual substantive commentary about service performance in annual reports of public sector entities, very limited. And as I said, it's not audited, and some jurisdictions don't even produce performance statements. So I think I've been able to argue successfully that we're privileging the financial information. Maybe what the point is that the GPFR have a role and they have a standing, and the standing they have at the moment is appropriate. It's that we're not giving equal importance and attaching equal significance to the performance information. So I'm looking to try and lift the bar there. Okay, that's it. Thank you very much. Happy to take questions.
So Andrew, you've given us some insight and some challenges, but I think also some opportunities to expand the ambit of what accounting is dealing with, which I think is really exciting. So I'd like to open the floor now to questions to see how people take some of that controversy you shared with us.
Okay.
Yep.
Because when you're trying to measure service, you've got a problem with the measures themselves. And you'd like to measure outcomes, and you gave a nice example in the healthcare sector, but the length of time to achieve that outcome can be years. So you're kind of forced to measure steps along the way. So I don't know, I'd like to be convinced whether you could have a framework when you've got so many different services and so many different indicators, because one of the things that we do know is that things that are easily measured will replace those that cannot be measured.
Yes.
And particularly if your incentive system is linked into it. So I'd kind of like to know how you think about this from someone who...
These are concerns and issues that have been raised probably for the 20 or 30 years you've been teaching performance measurement. And some people argue they're intractable. I don't take that view. So first and foremost, my view of the public sector is, if you look at the state jurisdictions, they all pretty much provide education, health, transport, criminal justice services. And of course, the report on government services that's produced by the Productivity Commission on behalf of the Commonwealth of Australia governments, COAG, would say that there is a capacity to compare and benchmark, and there is capacity to have a set of measures which are consistent and comparable between jurisdictions. So I would recommend that you look at the report on government services, because that's that framework that I looked at there, and they do actually look at justice and health and education, and they are developing and continue to develop and refine outcome measures and output measures, equity and access measures. But when you look through the individual chapters, you find that, yes, problematically, the outcome stuff is the hardest stuff, and I guess therefore, if it's hard, they've left it till last, yes? I then look at the New Zealand model, where New Zealand as a national government have set themselves national outcome targets, and this is this issue. People say, look, these outcomes take a long time, and the other critique, of course, is the outcomes can't be attributed to a single reporting entity. In fact, they can't necessarily be attributed entirely to the public sector. And an outcome in the juvenile justice space is as much contributed to by the education sector as it is by contact with the justice sector. So there's this concept of joined up government. And people would argue, well, it's too hard. We can't attribute it reliably to an individual reporting entity. And the answer is, well, let's not try and attach that outcome to an individual entity. Let's attach that outcome to the government, which is what New Zealand have now done. And they've said, well, let's forget about who in particular contributes and how much they contribute. Let's just all agree that this is a priority for New Zealand. We want to improve the educational attainment of Maoris. This is the national target that we have set. It then, as the ROG's advice said, what's good about performance measurement? It just shows us what we prioritise, and it gives us a basis against which to then start developing and implementing policy. So in and of itself, I think just setting outcome measures, even though they have all these intractable problems, is a good thing. But the other point you made is quite often there are interim outcomes, and that's recognised in a lot of frameworks. In fact, the Commonwealth framework says as much. It says that there will be a series of outcomes at the service level which then contribute, brackets, in a non-linear way to a broader outcome. But that's not an argument against performance measurement or reporting. That's simply recognising that there's different levels at which we measure outcomes. So I don't believe that it's intractable, and I believe it is sufficiently in the public sector comparable, as demonstrated through the report on government services, that we can come up with a series of consistent measures which will be consistent over time and between jurisdictions, which is the whole premise of the ROGS report. What I'm saying is that, and what we found in Queensland, funnily enough, those organisations that contributed to the ROGS report, they had pretty good performance measures, right? But the reason they had pretty good performance measures is because they were forced to contribute to the ROGS report. It's not because of management saying, isn't this a wonderful thing? And those departments and agencies that weren't delivering services that were captured in ROGS had really poor performance measures, which comes back again to the root cause. Why aren't we getting serious about, and of course, it's a bit chicken and eggy. I don't know if any of you read the annual reports of government departments and entities. And I know that, based on what I read in the media, the only thing people look for in the financial statements is how much the executive get remunerated. I mean, last week the Age reported on the fact that the City of Melbourne had so many executives who were getting paid more than $100,000 a year. That was it. That was the use by the media of the financial report of the City of Melbourne. But we're not holding these entities or governments to account and saying we demand this information. We want measures of efficiency and effectiveness. And I understand it's a bit chicken and egg. They're not there, so it's hard to actually demand, and you don't know what you don't know. Again, this is my argument for why we have to impose some conceptual framework and set of standards which applies across public sector entities, which they have no choice but to use, as imperfect as they may be. Yep.
Thank you. Thank you. I understand how at this stage there isn't much writing on how performance reports should be, well, whereas we've got accounting standards, which is law. But going back on accounting theory that I've learned through CPA and university, that we do have the balanced scorecard where you've got not just a financial aspect, which is regulated by our accounting standards, we've also got the customer focus and the internal focus and learning and growth areas, and I won't go too much into what the accounting balance scorecard is. But has there been any thought of looking to apply the balanced scorecard as part of performance reporting?
Only in this sense. I mean, the balanced scorecard is normally a concept that applies within an organisation, and it recognises that it's more than just about the financials, and that these things are all interrelated and integrated. And if we want to understand our organisation and how it's performing, we need to have that more comprehensive view of it. So that conceptually is this idea of service performance reporting. What I've been speaking to tonight, though, is as the general purpose financial reports are made publicly available, I'm talking about the information that's made available so that we can hold government to account. So quite often balanced scorecards exist within an entity, but they're not disclosed outside the entity. They are for management purposes. So I'm focusing on the performance information that should be, and to some extent is being reported externally as an accountability mechanism. The thinking there, as I tried to describe, is over time there's been thinking that we need to move away from measuring inputs and activities to actually focusing on outputs and outcomes. And the point there was, as I said, they extract the money from us. We want to know that they've achieved their objectives and they've done it efficiently. So it's these measures of efficiency and effectiveness from an external accountability perspective that should be of most interest to us as taxpayers, ratepayers and residents when we're holding government to account. But as I said, in some jurisdictions you don't even see that information in the annual report, or if it is in the annual report it's spread throughout it, or it's at the choice of the agency at the time what they put in and what they leave out. And it's at the choice of the agency 1 year to change and shift the indicators that they use and report on. If you look at the budget papers here in Victoria, so the output framework here, every entity does produce output indicators, time, cost, quantity, quality metrics. Again, they don't speak to efficiency or effectiveness, they speak to time, cost, quantity and quality of the output, the number of widgets produced. but they change year on year. Now, there's a process with the Treasury that you've got to justify why you want to make the change, but you can see that things will change when governments change. Things might change when the result's not really looking too good. Let's find ourselves another indicator, you know. So this is this political... Look, I spoke directly to a Director General in Queensland, so I'll use the Queensland experience so I don't breach my act down here. But basically, one organisation put up what would have been a really good set of efficiency and effectiveness indicators, and the advice that came down from the Minister's office was no, we don't want those. And the reason they didn't want them is because they then would have been held accountable against them. Yep.
Thank you so much for a compelling case for performance measurement in public sector. Do you see potential for new technologies helping us out here, or for new conceptual frameworks helping us out, or something like value added as we have in the taxation arena, or different capitals on which we define our performance? Love to hear your thoughts on that.
I mean, technology is an interesting area. The comment that was made here is if it's easy to measure, then I'll measure that and I'll avoid measuring the stuff that's hard to measure. And then we had this comment that sometimes outcomes take a long time and it's hard to discern what the outcomes are. So my view is, at this stage, that things like big data and joining up data sets, the administrative data sets of government, should allow us and enable us to get greater insights into outcomes and what works. So I'm actually quite optimistic and positive about deploying that technology and that data analytics capability into measuring impact and effectiveness, because not everything in outcome effectiveness is quantised, not everything is monetised. Some of it is a subjective analysis or an analysis that looks to impact that you can't describe in a metric, but you can describe in a narrative. So I think that there is great possibility in terms of data mining and data analytics. I know we had a long conversation before this lecture about that. And it's another, I'd love to come back and talk on DA one day, but yeah.
Last question.
Thank you. You were talking about New Zealand and how perhaps that's something we could start copying over here, or that's where we want to go. How did New Zealand end up at that point? I suppose that's point B. How did they get there? How long did it take? Was it easier? Was it harder?
The answer to the last question, was it easier? Yes, given the nature of the government there. So they effectively, there's two tiers. There's one government that looks at both local and national. Here, of course, in our federated model, we have states who are very independent and wouldn't like to be subject to any kind of Australian government legislation. And yet, of course, I find it strange that the accounting standards are actually Commonwealth law, and each state says we're going to comply with the Commonwealth law. So New Zealand, I think, had it easier in that sense. My understanding of New Zealand is they've been on this for at least 2 decades. They seem to have always been more progressive in this respect, in both financial reporting and non-financial reporting. And those of you, I said I wasn't going to touch it tonight, but I may as well. Of course, the New Zealand public sector have now moved off the International Financial Reporting Standards. New Zealand adopted IFRS when Australia adopted IFRS in the public sector. 2 years ago, they moved back over to the International Public Sector Accounting Standards. And of course, once they'd kind of realised, what was the best financial reporting framework, they really then got stuck into what's the best performance reporting framework. But they have been doing this for a long time. This is not an easy thing, but this is my point. When I came here to Victoria and I spoke to a few ministers, I shall not name them, they told me with great pride that they understand that service performance reporting is really important and that Victoria is moving to an outcomes framework. So I was glad to hear that, given that we've had an outputs framework now for at least 10 years. And I said, well, when's this going to come? And they said, well, look, Andrew, it's a journey. I said, I'd love to get to the destination. So here we've been talking about this, as my slides have said, since at least 2000. And we've critiqued in every jurisdiction problems with this area, and yet we don't seem to be able to resolve it. So I think it's going to be a lot harder.
Can we thank Andrew for some insights on the journey?
Thank you.
Because it is now my great pleasure to invite the President of CPA Australia's Victorian Division, Mr. Terry Brooks.
Thank you, Professor Kaufman. On behalf of CPA Australia and the University of Melbourne, I thank you all for being here tonight. CPA Australia is honoured to once again join with the University of Melbourne to present this annual research lecture, which has been noted as being the oldest continual research lecture series to be held anywhere in the world. Its origins go back to 1940, and since that time it's proven to be an invaluable platform for the latest thinking and research in accounting and finance to be shared and discussed. And I note with pleasure the phrase leaders in accounting, education and research. It's proof of that tonight. Thank you, University of Melbourne. Andrew, this is the second time I've heard you this year. You are always an exciting and interesting speaker in an area that a lot of people do not understand. I work for Victoria Police, and as you've probably seen and I think referred to tonight, we do wonderful annual reports because we have exciting things like helicopters and cuddly little German Shepherd dogs in the dog squad. But the irony here is, despite it being an organisation which is populated for the most part by people who want to see a positive social change, we can't report that. My example, back in 2004, when I project managed the last helicopter survey and then tender, was that we knew that according to Department of Transport figures, every time you saved someone from dying on the road or on a farm accident, or indeed when someone did die, it cost the community $1 million. And if someone is severely injured in those days, the cost immediately to the community was $800,000, but then with uncounted ongoing costs to that person and their families. And we made this a key plank in our tender discussions with Treasury about, okay, a helicopter is an expensive thing, but look at the outcomes, look at the savings in dollars for the community by helping people in distress. It has never yet been reported. It has never yet been picked up by government as a positive social outcome. And you've cited lack of political will, leadership within agencies not looking for efficiencies, and compilation ignorance. Well, I can't comment on the first two, that is for you to do, but I can say that, yes, I don't know how we will eventually get to the area where we will compile accurate statistical responses and accurate outcome measurements. I just know that we have to do it. For the lecture that you have given us tonight, I thank you again. As I said, it's the second time I've heard you speak in a couple of months, and every time I've listened to you speak, it's been a fantastic lecture, and I thank you very much. And ladies and gentlemen, thank you all and good night.